Hello, I'm Sean Eubanks, CEO of Renaissance Consulting, and today I'm going to talk about the things to be aware of pertaining to taxes in the cannabis industry. When you get ready to go into a new industry, you typically focus on startup costs, raising capital, defining the roles of your team, as well as administrative stuff like software subscriptions and opening a bank account, and of course you plan your legal and tax strategies, just like you've done with your previous business ventures. Next, you're ready to hire and train some employees, and finally it's time for the grand opening to start serving your customers. When you're preparing to enter the cannabis industry, however, it's a whole new ballgame. Sometimes our clients are surprised to learn that even though cannabis-related businesses are currently illegal under federal law, every business in this industry is still obligated to pay federal income tax on its taxable income. This is mainly because the Internal Revenue Service doesn't discriminate between taking tax dollars from business income that has been generated from legal activities and income that has been generated from technically illegal sources, which oddly enough includes the legal cannabis industry. Currently, the entire cannabis industry is beholden to Internal Revenue Code 280E. To sum up 280E in one sentence, you can't deduct normal business expenses from your income like every other business can. The history of 280E is that it was enacted in 1982 in response to a cocaine dealer who triumphed in a court case where he was allowed some tax deductions for his drug trafficking expenses. Evidently, the cocaine trade is not all fast cars, big boats, beautiful women, and exotic ranches full of hippos and zebras. So Congress aimed to prevent cocaine dealers from ever being able to use this loophole again, and they passed 280E. In 2015, rather than do the work to address the needs of the new legal cannabis industry, the IRS instead punted and just applied 280E to all of the legal medical marijuana companies operating in just a handful of states at the time. And 280E still applies today, but the implementation of this code aimed at stopping cocaine dealers was not only lazy, but highly inappropriate for the legal cannabis industry. Cannabis is a nearly $10 billion industry, with people in the United States already spending more money on cannabis than they do on Cheetos, Funyuns, and Doritos combined. And in neighboring countries like Canada and California, cannabis sales are now outpacing wine and beer respectively. Binge drinking is down 13% in all legal cannabis markets. Speaking of binge drinking, U.S. Attorney General Jeff Sessions stated that good people don't smoke marijuana and later rescinded the Cole Memo. The Cole Memo, when enacted in 2013, prevented federal funds from being used to target and harass legal, compliant cannabis companies in states that voted to legalize cannabis. Recently, Mr. Sessions has made comments that he's evolving on the subject. If the Attorney General, the DEA, and the DOJ concluded that the Controlled Substances Act was unconstitutional, that would pave the way for the descheduling of cannabis, which would lead to tax reform across the cannabis industry in general. But we're not there yet. So for now, we're stuck with 280E. Effective tax rates are nearly double that of any other industry, and essentially what we are left with is a cost of goods deduction and not much more. Your deductions vary for each part of the supply chain. The IRS has made specific provisions between producers, i.e. growers of medical marijuana, and sellers, i.e. sellers of medical marijuana. For producers, there are significant advantage and write-offs available, which is one of the reasons we at Renaissance Consulting encourage our clients to be vertically integrated. Production-related wages, rents, and repair can be considered as cost of goods sold upon the sale of the inventory for accrual basis taxpayers and immediately for cash basis taxpayers that are cannabis production-related expenses. However, marketing and general business expenses remain non-deductible. That's a bummer for those of us who love marketing and building successful brands. Indirect production costs that may be considered as cost of goods under 280E include repair expenses, maintenance, utilities, rent, indirect labor and production wages, as well as basic compensation, overtime pay, vacation and holiday pay, sick leave pay, payroll taxes, and contributions to a supplemental unemployment benefit plan. In addition to those, we have indirect materials and supplies, tools and equipment not capitalized, and cost of quality control and inspections. The IRS says, and I quote, "Only if these costs are incident to and necessary for the production of cannabis. If these expenses are not related to cannabis production, then they are non-deductible," end quote. There is some good news though. The IRS has rewarded those producers of medical marijuana who have elected to follow the generally accepted accounting principles, also known as GAAP. This is not to be confused with Old Navy. That's an entirely different store. Just look up at the sign. Those following GAAP get these additional expenses deductions. These expenses include taxes deductible other than state, local, and foreign income taxes, depreciation, my personal favorite, and depletion, deductible employee benefits including pension and certain profit sharing contribution, workers' compensation expenses, stock bonus plans, premiums on life and health insurance, and miscellaneous employee benefits such as safety, medical treatment, cafeteria, recreational facilities, and membership dues. Administrative expenses related to production are also possible. So that covers 280E for producers and growers of legal cannabis. You can see it's not all that bad. For the retailers though, which are those who actually sell medical marijuana to the end user, the IRS has offered very little in relief. This means that only the invoice price of purchased cannabis, less any trade or other discounts, as well as the transportation and other costs necessary to gain possession of the inventory, can be considered as cost of goods sold. The costs that are non-deductible are those that are directly related to the sale of medical marijuana, which is defined legally as trafficking of marijuana. For those who only own dispensaries without the offset of a production or growing facility, this leads to an effective tax rate that can be as high as 75% of their income. Let's look at two quick examples of how brutal the cost of goods is for a dispensary only versus a vertically integrated production dispensary model. Example 1. For a production facility with gross receipts totaling $1.9 million, a business with a high cost of goods deduction could deduct $1,064,000, leaving a gross income of $836,000. Thanks to these allowed deductions, this business paid taxes on $836,000 instead of $1.9 million. As a result, the business's effective tax rate was 44% of its final earnings. Example 2 though, for a business with gross receipts totaling $1.9 million and a low cost of goods with only $494,000 in cost of goods deduction, the gross income of the business was $1.4 million. Therefore, this business would pay taxes on $1.4 million. For this business, the effective tax rate was 74% of its final earnings. Using a vertically integrated model that includes the cost of goods from production, while you minimize the profit margin you sell at the retail level, can have its advantages. If you decide to open a retail dispensary only, you need to make sure to partner with a firm like Renaissance Consulting that knows how to help you squeeze out every penny. I hope this breakdown of cannabis-related expenses and overview of 280E has been helpful enough to get you one step closer to entering the fastest growing industry in the world. If you found this video to be helpful, please like it, share it, and subscribe to our Renaissance Consulting YouTube channel. You never know who in your network might benefit from this type of information. If you have specific questions about 280E, startup costs, or anything related to the business of cannabis, please feel free to reach out to us at startyourrenaissance.com. Thank you for watching and have an outstanding day.